All right, let's do this. Everybody who's out there, say good morning. Saturday morning coffee at DTS. No pre-planned activity. As usual, though, I get up in the morning and actually I started a little bit last night because a lot of thoughts came into my head. So I actually have quite a schedule here. It's going to be kind of a hit list of a lot of smaller topics, kind of. Most of them educational, a couple just informational. So let's get going. This is going to be like speed dating, I said. Could be good or could be bad. You know, if you come to a presentation, it's about blah, 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 and you don't like the topic, you got to sit there for 90 minutes, you're bored to death. Here, you're going to like something today, and you're going to not like some other stuff maybe or be bored, but we're going to go through about 12 things here. Here's a list of what we're going to go through. Actually prepared all the slides for this. I'm getting really quick at this. Talking points, maybe a little sleepy, some of these. I want to talk about the DTS Trading Room Friday, why I took off. That's an educational topic. I want to talk about number one time for long-term subs to show up for something, long-term trader subs to show up. That's going to be half educational and half is going to be talking about subscribing to something. So I'll have to ask you to tune out at that moment because I never normally do that. I want to update on the home study. I can tell who's ready to learn. Update on the tracking sheet. Email whitelist. The email went out yesterday. That'll be all real quick stuff. I want to expand a little bit more on how you use the free stuff page. And then we're going to have an educational topic of the day. The big one is going to be you need to react to your stock or market moves to make money, question mark. And then question and answers from you guys, all right? Sound like a fun morning? It's supposed to be a relaxing morning. We're going to crank through this stuff here. Here we go. All right. Friday, the board of directors at DTS declared a holiday for the DTS Trading Room. I had to laugh. I was doing some office work Friday for part of the day, and when a couple of emails went out from DTS, I actually got several comments. There were 3 or 4 of you emailed me, said, hey, I thought you were taking the day off. And actually 2 of you literally had the word fishing. And I don't know why I never talk about fishing. I don't really go fishing. I used to. They said, I thought you were fishing. I never said I was taking the day off to have fun. I do that a lot, but not yesterday. Here's why I took off yesterday. And never really explained it. I could not trade based on a psychological risk to reward concept. And if you've never heard about that, it's because I made it up about 7:30 this morning. I think it's important, just a quick little one-hit thing to talk about this. And this is more kind of a day trading concept because you don't get these psychological issues as much longer term. But this week I had a really tough Monday. Just one of those bad Mondays. And when you do that, it's very tough for new traders to deal with that. But what you have to do is you have to just come back and do what you always do, not change much at all. And what happened was the goal just becomes for me to just be green for the week. Just chip away, come back and be green if you had a rough day. Well, it turned out that, Tuesday was a profitable day, and then Wednesday and Thursday, the trading gods just rained on me, and I made almost 2 weeks profit in those 2 days. So I ended up almost at the weekly goal. So here I am Thursday at close thinking, okay, I'm like almost at the week's goal, and I start off really bad. And I thought, what could I do tomorrow that's going to make me happy? In other words, if I lost even 1 R, I would be really upset. And if I made 2 or 3, I wouldn't even care. Does that make sense to any of you what I'm saying? If you day trade, you can maybe put yourself in that position where you just simply look at the screen and you say, there's nothing I can do that's going to make me happy. So I said, I'm just taking off. I mean, I'd rather have fun and do something or work or have fun or whatever it is. And sometimes you get that way. And if you're not psychologically ready to trade, you shouldn't be trading. You shouldn't be sitting there like, well, I got to be here, so I'll just be here. You never do that. So that's why the holiday was declared and I took off. I want to talk about, real quickly, the couple of home run trades, sort of. Wednesday and Thursday, the trading gods just gave us a couple of gifts. They were different, though, and I just want to talk about that. And I'm not going to sit here and go through all the technical aspects. I want to kind of hit back on a bigger picture. And by the way, this whole concept of how you handle a losing day, I'm going to do a video on that real soon because I think it's an important topic. And it's another one of those topics where the common street advice is just 100% wrong. I guarantee you, if you go anywhere and any kind of trading reference and say, what do you do after a bad day or a bad week? The advice they give you is wrong. It's 100% wrong, and it again causes people to be losing traders. Gifts from the trading gods. They were uniquely different, though. Low Wednesday, there's the entry, there's the stop. You can look at your own charts. Both these were about 3R trades, triple risk trades, and I didn't do a great job getting all the money out of them, but they were gifts, and I wanted to kind of take the money on some of these. But the little point I want to make here that's different on these two, and again, you'd have to kind of look at the charts. Low was a slam dunk, right? You're in the room, Mirnis, guys in the room. Linda, it was just a slam dunk, right? There was nothing to talk about. There was no decision to be made. It was just boom. There was just absolutely nothing to talk about because there's 100% certainty. M turned out to be just as good. Actually, I made more money from M, but M was tough. M was not a slam dunk. M was stressful. It took some luck. M took some luck. There's some luck in everything you do in life. Everything. The better you are, the more likely you are to be lucky, the less you need luck. But, M, I could have totally missed. M, I could have stopped out. And I just remember you happened to say in the room, Ernest, I don't think you got M for the same reason I almost did. M was tougher. You don't have that 100% certainty. There are different trades. And the point I'm trying to make here is that if you can't look at the chart and say, this is what I'm doing before it happens, you're not going to be likely to be making money. You got to be able to say, look, here's what I'm doing. I say to the room every morning, we sit there, applies long-term investing or day trading, but you guys know in the room, I sit there every morning, right, in the top 5 or 6 things. Let me ask you guys, a lot of you here from the room, the hot list, top 3, 4 things. What do I go over the last 5 minutes at 9:25? What do I go over? May I have some coffee, because this is Saturday Coffee at DTS. What do I go over? 9:25, same routine every day, same boring routine. Right, exactly the 4 or 5 stocks I'm looking at, exactly what the entries are going to be, right? I'm telling you the entries before the chart even starts printing anything, right? And if those entries don't occur, then I'm not going to get in. Sometimes the entry is an entry such that it qualifies as saying I'm not going to miss it. That was low. Wasn't going to miss low. There's no way I was missing low, period, no matter what it did. And I don't think many traders have the chart knowledge, confidence, psychological makeup to be able to say that on a chart, to say this is a chart I will not miss. Traders kind of sometimes goof up both ways. They stop out of things they maybe shouldn't be in, and then they sit there like a deer in the headlights when the best trade of the month comes along and they just watch it go, and they don't do anything about it because they don't have the knowledge to know what to do. So I want to make that distinction. I want to make another distinction too. M took some luck, just talked about that. M was on Thursday, and there were only 2 trades on Thursday, M and Wish. M was an exciting blast-off trade, biggest green bar on the chart for weeks. And Wish just put in another boring little red bar. Boring as could be. What do you think my favorite trade is? Wish or M? Yeah, and not by a little bit, by 1,000. This is the bread and butter. This makes the money every single day. Boring, old, it made more than the day's profit. Yeah, M made it 3 times the day's profit, but you know what? M doesn't come up every day. M is tough. M stops you out sometimes. Wish is just the bread and butter, everyday boring stuff. Trading should be boring. You shouldn't be looking for the M's. Now when the M's, and when I say M, I mean the trade M, Macy's. When the M's come along, great. If you can take advantage of them, great. Sometimes I say I'm going to go for the home run on this one. That's great. But you don't make your money just getting the home runs. It's the bread and butter every day. And Wish was a short, obviously, the chart's going down. It was just a perfect entry, a classic trade, just the thing that works most of the time on most days. Boom. So M, great trade, but you know what? Not what I love. And I say that because hopefully some of this hits home with some of you, because I think I've worked with people for so long, I know one of the things that I see all the time is everybody always backing up, going for the big home run. They look at the high of the day list, the low of the day list, and that's their source of trades. At the end of the day, they look to see what moved 10% and figure out how they could have got into it. To me, that's a losing game. It's fun when you get it, but it's just not how you make your money every day. Another aspect about taking off, there's a plus and a minus to DTS. The plus and minuses is just me. That's the plus and the minus. I want to take a day off. Guess what? Too bad. I'm taking a day off. That's the way it is. But let me talk about that just for a quick second, the good and the bad about it. Number one, well, what does the room do? Well, I always send a note out to them and say, hey, here's what I suggest you do. If you had a good week also, and you may not have, I understand that, or you may be new and not even trading yet with real money, but take some time off. I think it's extremely important psychologically if you're day trading to take a day off, like every other week or something. If you have a good day, take the next day off. Don't come back thinking, I got to make more money. Reward yourself a little bit, and enjoy it, and be and mentally prepare yourself and picture yourself as that successful trader and build on that. Don't just keep coming back and then after a good day come back with a bad day or whatever. Reward yourself sometimes. So days off occasionally, and I mean not just the weekend, but taking a day off during the week when the market's open is a great thing to do psychologically. And the other thing about it being just me, you could look at that as good and bad, and I think very much you should look at it as good. I want to refer back to you about something, a long time ago, back when I was at another company. It was called Pristine. We actually had 3 rooms open at one time, and each room had 2, 3, 4 moderators. And the decision was made at some point to combine all the rooms into a super room, one super moderator room. And of course, decisions back then were made in a company like that were made mostly by the sales team, not by anybody who, was running things. And I, of course, was just totally against this because I knew what a bad thing it was for clients. From a sales point of view, people liked it because there's a super room, but it really is bad for people because you may or may not like me if you're, obviously you subscribe to something, you like me, but if you're just here listening, you may or may not like me. But what I do think is important is that you latch on to a mentor and learn from him. You can't sit in a room with 8 moderators throwing out thousands of trades and then you just cherry pick what you think is good. You never make money that way. You don't learn anything that way. The goal of the room is not really to get you to learn how to trade, is to make money. But still, it just gets very confusing to people. So I really think it's important that you settle in on a style. There are different ways to make money. I've said that from day one. And you have to follow the style that you want and learn something you want to do. Does that make sense? Yeah, it's just a mess, Alfred. It was a joke. It's just a complete joke, And then people end up kind of trying to pick their favorite anyhow, but then they get distracted. And I think people in the room following, kind of non-experienced traders, I think people had a much more difficult time making money in the super moderator room. It was just terrible. So, like it or not, I think the way to do it, if you don't like me, find someone else, but find a person, latch on to them, copy a style, and then develop your own style from there. People that take classes with me, they learn from me, but then they have their own little tweaks in personality and style. So I think that's the way you do it. 100% agree. Thank you. All right, next one. This is going to be a half educational comment real quick, and then it's going to be, I'll tell you when to cover your ears, okay? When is the most common time for people to come get help in the market? Again, remember, I've been working with people for 20 years. When's the most common time for people to come get help in the market? Almost, this is like a 95% thing. Right, exactly. Yeah. When they, as they say, when the horse has left the barn, when they're in a lot of trouble, when they're not sure what to do, when they've already screwed up big time, when they're in a psychological funk, when they're upset. It could be for some people, it could be they just entered so late that they're losing a lot of money. Or for some people, it's that they had really good profit, and now they're giving most of it back and they don't know what to do. And of course, you become the deer in the headlights, right? Yeah. So what is the phrase horse left the barn? Essentially, it draws attention to the fact that potential remedial action is no longer appropriate because the thing was supposed to prevent it has already happened, blah, blah, blah. I always like to look up these things, and you know what? There appears to be no information about how or where this originated. I always like stupid phrases, where they came from. It's usually like, well, back in 1942 in a Dutch province, Mr. Smith said to Mrs. Smith, or, there's always something like that. There was nothing about that for a horse leaving the barn. It was just no particular origination from it. But this is the educational part. I want to throw this out there because I've seen too many sad emails. And a lot of the emails, when that happens, there's nothing I can do. I was in this stock and I had $60,000 worth of profit and now I only have $3,000. Should I keep hanging on? The answers are meaningless. It's like, look, you blew it a month ago. You blew it 3 weeks ago. You blew it 2 months ago, whatever it is. It's over. It doesn't really matter what I say. The idea is you have to go back in time and not do what you did. So it's sad when that happens, and I don't like to see it. And the warning here just simply is that you make sure that that doesn't happen to you. If you are doing good and you know what you're doing, then fantastic. You're not even listening to me. If you did really well, which a lot of traders may have done, because A lot of traders do good in a bull market, but there's this percentage of traders out there that just don't know why you'd ever sell anything and hang on for dear life, and sometimes it turns into losses, sometimes they give back profit. So what I do want to emphasize that is if you're not comfortable, or if you're looking to start long-term investing, or if whatever it is, you can always get a hold of me if you just want help with what you're doing. And I also just want to emphasize, and here, it's sad when I get an email like this, blah, 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 but there's a proper moment to act. And every moment after that, it becomes exponentially more difficult to do the right thing. And I'm not going to do that now because we don't have time this morning, but I can walk through why that is. But every justification you make for not doing the appropriate thing, the reasons that you had to do that, those reasons actually become stronger the more and more trouble you get into, right? Whatever it was that made you say, oh, okay, I'm not going to sell that here. I think it'll come back. I'm losing too much money. I'm sure it'll snap back, and then I'll be mad that I sold it here. All those reasons become stronger and stronger the more trouble you get into, right? So it becomes exponentially more difficult to do the right thing once you pass that moment in time where you don't do the right thing. So there's the educational part of it. Cover your ears now, everybody. Cover your ears or walk away for about 60 seconds. A lot of people don't even know I have this, but there's there's actually 4 subscription services you can do at DTS. One is a long-term trader. You probably see it on the homepage of the website. It shows this first 2 quarters, 60% annual rate. You can read it there. And thank you, Eric. And it's hard to maintain that percentage, because if I just stayed even the rest of the year, that would cut in half because it's an annual percentage rate. But we're actually up. It's at 66, 67. I didn't run it yesterday, but it was a Thursday. I think it was 66, right, Eric? So it's doing great. And what I really want to emphasize is that if the market dropped 1,200 Dow points on Monday at open, I'd be making more money. 99% guaranteed. It would be almost an impossibility that I wouldn't be. So it's a balance of positions where I'm not relying on the market or the market call, because that's been very tough this last year. So it's that unique balance of finding positions, and if you're doing that for yourself, great. If not, if you have more than, if you have $20,000 you're investing, the difference in what the LTT does compared to maybe what you're doing compared to the subscription rate, you can figure out for yourself if it makes sense to do it. So there's a quick little plug at the end of an educational comment. A couple of announcements. DTS, the home study program, is premiering next month. I think you're probably here, but there's a little home study review team. 3 people that put together are going to review this. It's going out to them this weekend, maybe Monday at the latest. This is the first course. The other 2 courses will follow every 6 weeks. And this will be a great thing for a lot of people. Yeah, and a couple of points that I want to make about it real quick, because I've been getting some questions about it. Did I put that on here? Oh yeah, it's right here. It's not what a lot of people think. It's not like just as simple as recording. It's hosted by a company, a software company, and it's a company that provides home study type material, learning programs. They're called learning programs, but they're the learning programs to Fortune 500 companies and to universities and everything. So it's a system where you can go through and go at your own pace and pick up where you left off and hop around and click on the sections. And this is something it's an addition to the DTS seminar program. It's not a new offering. It's part of the program. And naturally, anybody in the seminar program, one of the most common questions I get, you get this. I told you, I promise you, when you sign up as a seminar student, it's a lifelong thing, and you never, ever get charged for it anymore, never. So you pay one time, and that's it. That's all it ever is. So no, you have access to this if you're a seminar student. If you're signing up new, then you get access to it, yeah. For those of you that have been through the seminar program several times, I don't think it'll be a big deal to you. But the big thing for this for a lot of people is there's people that just can't make Saturdays. There's people that are slow learners. There's people that just would prefer to go at their own pace. There's people that can't sit at the screen for more than 2 hours, that type of thing. So this will be a great addition. It originally started off my mind to be more of something that was going to be less than the live seminar, and that's changed. It's now going to be a total encompassing every comment I have, actually more than live seminar. And it's going to probably change a little bit the nature of the live seminars that are going to become kind of quasi-practical application review days. So I think it's an exciting bunch of stuff going on. And this will be an opportunity for a lot of people who have been, I know there's a ton of people the last year who, they just can't do a Saturday class like that. Boom. So that's it. Moving on. The what I started to say is the home study course, I believe I am okay with it if that's all somebody can do. I would prefer, and I'd like to see the home study course be a backup to still coming to live classes, but I think you have to sit through 3 sessions, whether it's 1 live or 2 home study or 1 home study, 2 live, or whatever it is before you really get serious about putting real money in the market. And that's why I have what I call the 100-day schedule, because that would encompass going through this 3 different times, all right? There's still advantages to live. I know if you can't make it, I think you'll be okay, but anybody can make the live. It's always, I think, an advantage to be live. It's been pretty well proven that, you do learn better in a live environment for a variety of reasons. All right. Another quick blurb about just an update. Because of the home study work I've been doing, this has been taking up my extra time. I've not been able to produce for you that tracking sheet. If some of you may not even know what I'm talking about, but I've done some presentations where I have my tracking sheet I show you. And some people wanted it. I've been reluctant to do it. I decided I would do it, but I have to fix some things up before I get it out to you. When I went to fix it, I totally screwed some things up, and it actually messed me up for a couple months. But that'll be coming once I get the home study thing out of the way this month, okay? Yeah, that's true. There's no jokes, Mark, in the home study. I just couldn't do it. You can't do jokes to a non-audience. It's really tough to do. I tried it. Email went out yesterday. I just want to update you on this also. The internet, an email, it's going to only get worse as time goes on. When you get emails from me, like when you get an email about this class today, about this today, when you get an email about, and don't forget, I have the biggest educational topic is coming up in 5 minutes, so don't get bored here. When you get like invites to events like this, it goes through a mass email system. Okay, it goes out to lots and lots and lots of people. That's one email system at DTS. And then if you just email me and say, "Hey Paul, what's going on?" That's just a personal private email, just like you would have. So there's 2 different things happening. Usually the problem is with the big mass distribution systems. That is where a lot of times different ISPs, like Yahoo or AOL or wherever you use for your email. There's a big push out there to avoid spam email. They change the rules every week. And that's why if you notice, like in somebody asked me, why does it say access word instead of password? Well, because some ISPs decided password was a spam word. And if password is in your email, they'll throw you out or put you in the trash or whatever it is. So there's all kinds of weird stuff going on out there. And Yahoo just stinks. I mean, I've just over my experience, every time there's a problem, it's Yahoo's down, Yahoo can't handle it. So if you have Yahoo, it's not me, it's not DTS, it's just Yahoo is difficult. So a way helpful to avoid that is if you tell your ISP, yes, I always want to get emails from this company. It's called whitelisting. I sent out an email yesterday. There's no genius to it. I mean, you can simply, Paul, post the link to the email. Where is it? Oh. You can just Google, how do I whitelist at Yahoo or whatever email company you use. If you want to see the whole email, here's a link to the whole email. It's really long, but if you click on it, it'll take you to the email. And you can click on those and figure out what to do. So no big deal, but just people get frustrated when they don't get an invite, when they don't get this, they don't get that. So that would help to whitelist DTS. There you go. I know I always mention the DTS free stuff page, but I want to just take an extra second to highlight a couple things in here. If you haven't been there, it's all good stuff. It's all supplemental stuff. No, it's not the seminar program. No, you're not going to learn to trade from the free stuff page, but it is required for seminar students. It's all great information. Right now, it would take you way over a week to get through it all, even if you never left your desk. If you're confused where to start with the Hall of Fame. You'll see the section there if you go there. Remember the archive pages. What's on the site is only, on the DTS site, is only a fraction of what's out there. There's the archive pages if you want to go back more than about a dozen videos or whatever is currently on the site in all the different sections. You also can go to YouTube, naturally, if you want to, And there's advantages and disadvantages. In YouTube, of course, you'll have a list of other videos. Some may be DTS, some may be other places. That's great if that's what you want to do. If you're on the DTS site, you can simply hop around from DTS video to DTS video. What some people do is if you subscribe to YouTube, you'll get notified when a video is posted. And then whenever it's posted on YouTube, it's also posted on the DTS site. So if you want to go to the DTS site, you can get notified by YouTube and go wherever you want to go. I don't care if you subscribe or not. It makes no difference at all to me, DTS. It makes no difference at all. And it's also something that was brought up by several people to me. It's a great way to get to know me. In other words, if you're kind of newer and you heard me somewhere, or a lot of people come here because they see the YouTubes on, or the YouTube videos from DTS. But if you shouldn't ever really, certainly not sign. You can subscribe to something because it's a monthly thing, but you shouldn't take a seminar program, a big commitment from somebody you really don't know. So a way to get to know me is to go through those videos, because that's me teaching and talking like I would in a seminar class. All right? Whew, a lot of stuff to go through. Free stuff page, boom. So have fun there. And I'm talking mostly, of course, to newer people who aren't aware of all that good stuff. All right, let's get on to the last little topic here. To make money in the market, you need to react to key movements in your stock, forex pair, or the market. True or false? I'm going to give this some time here. Think about this. To make money in the market, you need to react to key movements in your stock, forex pair, or the market. We've had a few little educational tidbits this morning, but this is kind of the feature. As a matter of fact, I kind of debated about what to do for Wednesday, whether I do this topic or the topic I picked. You'll see that topic in a minute. But I think this is more of kind of a one-off quick topic, so I put it in here. True or false? Gabriel's smart. Most all the questions I ask is it depends. But no, actually, I can pretty much go with the true or false on this one. Well, you'd have to. That's a good question, Eric. I didn't think about that. That's a good question, because yeah, I guess a high-level trader would rate a key movement different than somebody else would. Yeah, but I think the word react is the key word, Eric. Yeah, the word react, I think, is the telltale thing there. Yeah. See, this actually is false, and this is really a big deal. This is a big deal. As a matter of fact, I put this as one of the top reasons why people fail. Most of you know the answer is false, and it's because you have to be able to anticipate the next move. The most common thing I say in those Monday night scanning sessions, when someone suggests a trade that's already 2/3 of the way to the target, is that we have to be better than that, right? We have to be better than that. But here's where I think the problem comes in for people, is that they look at successful charts, and then they kind of go back to what they think the key move was, and then they try and project it to the next trade. But again, it doesn't work that way. This is why people lose. They see the moves after they happen and think this is easy, but they are lost in real time and chase things. See, you got to be able to sit there and understand the bigger picture and say, if it shows weakness right now, that's a buy, right? How many times in the room, guys, do I say, if it breaks below this base, I'm going long, right? Not above the base. See, anybody can say, gee, it broke above the base, it's a breakout, I'll go long and I'll make lots of money. And it's not the way to make money. Sometimes it works, sometimes it doesn't. But you got to know when you can go long below the base, right? That's when because then when you're above the base, you're already making tons of money before somebody else is even getting into it. So you have to have, the knowledge of the chart well enough to get the confidence to say, yeah, I know when I'm supposed to be in this. And you get in it at the appropriate time, right? When you chase, you only make money when you catch the home run, which is actually really rare. It's actually really rare to catch those. But it's what draws people in. It's the little, the little shiny piece of metal that attracts people. And for the most part, it gets you going down the wrong alley. It's like I said earlier with those two trades. Once in a while, you get a home run, that's great. But you get a home run because you understood the pattern, you got a great entry, and you're making good money on a normal move. And then a good move comes along, and then you got a home run. That's great. But if you trade the way most people do, you require the home run just to make average money. Does that make sense, everybody? Now, you may be thinking, in the back of your mind, Paul, are you contradicting one of your own favorite quotes, a Mark Douglas quote. Mark Douglas has good books. I always say the number one book I recommend to people is Trading Your Way to Financial Freedom. It's on the website on the other stuff page. I have no tie to the person. I think it's the best book out there. But the next group of books that we have psychological topics would be the Douglas books. He has a lot of great comments we think extremely alike. And you may be saying, well, Paul, is this violating this concept? Good traders need to be rigid in their rules and flexible in their expectations. Most traders are actually rigid in their expectations and flexible in their rules. I paraphrase that a little bit from my head, so forgive me, Mark Douglas, if a few words are off there. But that is one of the greatest quotes, one of my favorite things that I refer people to. This is great. But this is not, what I just said on the last slide is not contradicting this at all. And whether you anticipate or whether you react to a chart, you can be wrong either way, right? This statement from Mark Douglas deals with how you prepare and react to any trade, not whether or not you're reacting or anticipating. So that's a great quote, and I firmly agree with it, but it doesn't contradict with the fact that you can't just be going around reacting. Other words or terms that I use sometimes are to say that the stock is dragging you around by the nose, that you're chasing the stock. I'm always saying that you have to let the stock market, Forex pair, come to you. You have to be sitting there waiting for it, knowing where it's going, expecting where it's going, and be waiting for it, not being dragged around by the nose. Make sense, everyone? While I quickly Googled Mark Douglas to try and make sure I had that quote right, I ran across another quote he had that I don't think I've ever seen. I'm sure I did 2 decades ago, but it is something that I think I have so often tried to emphasize, and I think he maybe said it great. I want you to read this because this is so incredibly accurate and something I try to get across to people all the time. Read this. Something I've been saying for a long time, so many words, and didn't realize it was a Douglas quote. I know it may sound strange, this is Douglas talking, I know it may sound strange to many readers, but there is an inverse relationship between analysis and trading results. More analysis or being able to make decisions in the market's behavior will not produce better trading results. There are many traders who find themselves caught in an exasperating loop, thinking that the more or better analysis is going to give them the confidence they need to do what needs to be done to achieve success. It's what I call a trading paradox that most traders find difficult, if not impossible, to reconcile, unless they realize you can't use analysis to overcome the fear of being wrong or losing money. It just doesn't work. Is that just a fantastic quote for those of you who are successful at trading? Is that not just fantastic? A lot of people don't understand what this means. Here, emphasis added. This is the line to me that is the whole thing. There are many traders who find themselves caught in this exasperating loop, thinking that more or better analysis is going to give them the confidence they need to do what's to be done to achieve success. My answer to this, for the most part, I summed it up by constantly saying that trading is a video game. It really is. It's just a video game. And the more that you get caught in this loop that he talks about, the more trouble you're going to have. I think it's just phenomenal. I imagine subconsciously this was in my mind somewhere. To be honest with you, I would swear I've never seen this quote before. I'm sure I have because I've studied stuff 2 decades ago, but I don't ever remember that in those words at all. But it's what I've always been trying to say. Amazing quote. You guys can start getting any questions you have ready. Wednesday, guess what? I have the topic already all set. It's called the walkaway. I can't even read it. Anyone can learn technical analysis well enough to make money if they have the right mentor and they put their mind to it. It does not guarantee success. Eventually, every trader's fate will depend on their trade management, which is the topic that invokes all of the psychological issues. So that's going to be this Wednesday coming up. You'll get invites to that, of course, being a DTS member. Next seminar cycle starts Friday, September 10th, like an extra week in there because we have Labor Day. And remember also, all of you, Labor Day, I'm taking off that Friday as well. So we're going to have a nice 4-day weekend for those of you who want to plan something Friday through Monday because Monday is Labor Day. Are there any questions? We're at 9:35, right on schedule. I allowed 10 minutes for questions here. Try to finish up around 9:45. Anybody have any questions on anything at all? Technical, DTS, what I put in my coffee. I thought it was a fun morning myself. Well, Time frame of reference, as I use the term, Loic, is the time frame that your strategies occur on. It's a time frame that initially your numbers are all pulled from in terms of entry, exit, stop, targets. It is your choice, whatever you like. You could be a 1-minute trader trading a 1-minute chart and being in trades for a few minutes, or you could be a hourly chart trader, maybe staying in trades for 2 days. You can be a 15-minute chart trader. Your time frame of reference is a personal preference, what you want to do. Just like if you want to swing trade, long-term invest, day trade, there's no right or wrong. I personally like that 15-minute chart, 60-minute chart as my time frame of reference. But then, of course, I think the secret to trading is once you get that picture of power from that time frame is that you're able to come down to smaller time frames to find great entries. Okay? Yep. What do you think? A mechanical strategy will never work, Gerald. That's already guaranteed. If you think about it mathematically, it can't be. No mechanical strategy. You're talking about a black box concept. You're talking about a system where you're going to go long based on a technical indicator or enter over blah blah blah, stop under blah blah blah. It will never ever work. Period. It's guaranteed through history. It's guaranteed through practice. It's guaranteed through the laws of common sense. You have to be able to read charts, the changes that happen. I mean, what you can subscribe to is, they call it a black box formula, but there's somebody changing the formula every hour, so I mean, it's no different than being in a trading room, so to speak. But one of the things, Gerald, is this, think about this. What if I invited you and Loic and Wes and KY, I invited you guys to a poker game at my house, and I said, hey, got this great new game we're going to play, Gerald, and it's great because nobody's going to lose. We're all going to be winners. You'd say, well, Paul, that's stupid, right? There's got to be losers. Well, there can't be a system in the market where everybody wins. And I know you think, well, gee, I'll just have my own little thing, but it simply cannot work. There's nothing that does work. And you don't have to believe me. Just go try whatever you want, and just go try all those things and see how they work for you. Because every time I say it to somebody, I hear from them a couple months later, yeah, Paul, you're right. But it's good that you do, kind of, because I think it's helpful. I mentioned this before, that one of the reasons I like people to try to learn on their own first, because if you're successful, great, but if not, then you're really prepared to learn. Because if you're always thinking, oh, gee, I could just go get a formula, indicator, a black box thing, I'd rather have you try it first and just, get disgusted and say, okay, man, none of this crap works. I'd use it, Gerald, right? If it worked, I'd use it. I'm not an idiot. I'd use it myself, right? All right. I've heard the term dark pool trading. Oh, yeah. Dark pool trading is the HFTs. It's been around for a decade, KY. They're out there. Doesn't matter at all. If you follow a chart, KY, you don't really care about any of that garbage, because whatever happens, it prints on a chart, and you get to see the chart. They played a little havoc with some, with things a decade ago, but they still do the majority of the trading, by the way. But it doesn't matter. It just, you follow the chart. You don't ever even say the term dark pool trading. You don't need to even know what it means. How did you know that it will be the 9:35 reversal time or the 10 or 10:30? Did you look at the price action to decide, or something? Did you take the first loss and come back to hit the higher low in the first reversal? I'm not sure which trade you're talking about, but any ones I showed you today, they were all one try. I never took a second try in anything. But what reversal time is most likely to happen is based on your knowledge of the chart and the pattern. In other words, every chart is a certain pattern. And the urgency, which depending on the pattern, whether something's going to flip around at 9:35 or run to 10 or 10:30, it depends. If you, for example, have got too extended on the hourly chart and you want to short something, and you drop too much the prior morning, you need to retrace back, so you're looking at 10 or 10:30. If you have something where you gapped just a hair below some consolidation and starts to run higher, it's going to be a 9:35 reversal. So there's certain patterns that give you a good indication which one you're looking at, but you don't always know. Sometimes 10 and 10:30 can be tough, Loic, all right? Yeah, they call them bots too, Jag. Yeah, they call them bots, dark pools, HFTs. You can Google it. It's an interesting thing. But here's the thing I don't want anybody to ever do, and that's to use any of that garbage as some kind of an excuse. It's a sign of a losing trader, and I see it all the time when they say, "Oh, the bots got me." The bots got me. Oh, they came in and the market maker took my stop. All that crap. You know what? It's all part of the game. It's all part of what's out there. It's. I always used to joke that it's like when I golf, I'd say, oh, I had a great shot. I hit it pin high, but I was 400 yards to the left. Well, that's part of the game. You don't get credit for hitting it pin high when you're 400 yards to the left. You got to do both things, and all this is part of what we do. You're out there trading with, everybody makes too big a deal out of that. It just simply doesn't matter. Get a chart that's moving your direction. Find a great entry. Think about it this way, guys. If you're day trading, if you short the high of the day, who cares? Who cares about bots, market makers, any of the stuff? If you buy the low of the day, who cares about any of the rest of the stuff? It just simply doesn't matter. Learn a chart well enough, you know where to get in or out, and none of this other stuff matters. Don't focus on it. It just distracts from you. Charts are charts, and whatever you think may be legit or rigged in the market, whatever it is, here's one thing that's not rigged, is that every time a stock is bought or sold, it prints on a chart. And that chart is true, it's real, it's what's happening, it's the sum total of all the decisions of all the people involved at the moment, and that's what we look at, period. And it eliminates all this other discussion. All right? Other questions? I think I got them all. I don't see anybody typing. Hal's typing. We got one last question here if Hal has a question, otherwise we'll say have a great weekend. LOL. Oh, thanks, Paul. All right. Hal has officially ended this, looks like. All right, everybody. Hope you enjoyed today. Have a great Saturday. Have a great rest of the week. I'll see you all on, well, actually, we're having scanning on Monday, too, right? I think it's scanning Monday and then the event on Wednesday, which will be this event right here, the walkaway. All right? See you guys.